the Home Tour Podcast. This is episode 22, and I am Payton Peoples.
Megan Mulvey.
Christian at CrossCountry Mortgage.
Yeah, so we are here today, and Tyler's not with us, but he'll be back next week. But we are going to talk today about some cool updates that have happened in the mortgage world that could impact your ability to finance and purchase a home, and some different ways that you can finance homes. You know, you may not realize that you don't have to have a W-2, or that there's other. What? Do y'all see that?
I do.
Why?
Yeah, like,
Every time I talk with my hands, it like throws things up. So I have to stop talking with my hands. Okay, so we're going to talk about like unconventional, unconventional.
Yeah.
Non-conventional.
There you go.
Yeah.
Options for financing. So tell us, what is going on in the mortgage world? I know we're all itching to know.
Megan has
Christian,
a very cool update. You start with a cool update, and then
tell us the update, Megan.
Yeah.
Well, in the world of FHA, which is used a lot around here, especially, guidelines have been updated to help with gift assistance, because we all know, like, especially now when buying a house, down payments are hard to come by because they're getting to be more and more and more when the prices have gone up. So we're allowed with FHA now to get a gift from a relative or whatnot and not have that pages and pages of documentation that used to have to come with it. Basically, if they wire it through the attorney's office straight direct, you don't have to have those months and months of bank statements and piss off your neighbor, you know, and their dad and their brother with every transaction being analyzed. They don't have to have that anymore. So that's really exciting.
Amazing. Yes, because I know that's a huge downside, or has been in the past, for buyers. So when they're like, they want to utilize help from somebody else, but they also don't want to have their friend or family members' privacy completely ripped apart.
I love getting on those phone calls like, hey, Mr. So-and-so, like, I promise I'm not going to care if you spend XYZ on porn site that you're looking at. Like, I don't really care. Just want to show that this money is not drug money. Thanks.
Right.
Bye.
Right. I just
no more of that.
That's amazing.
Yeah.
That's amazing. So huge update for people, because that's going to alleviate a lot of stress and
that's true.
Just issues in general and uncomfortable conversations.
Oh yeah,
that's true. It does. We sometimes find those borrowers that don't have like a perfect credit to qualify for a conventional loan, because in the past everybody wanted conventional. You know, it's supposed to be easier. I mean, it's very similar to FHA. There are just a few things. FHA is more flexible credit-wise. But with this new update, or now that everybody's talking about it, you know, people are able to afford maybe a little bit more house on FHA, especially if your credit's 620. I mean, your PMI is higher in conventional because the PMI is based on credit, and FHA, mortgage insurance, is based on the amount that you're borrowing. So that does help a lot. Now, you get a gift, wire it straight to the attorney, you know. Yeah, there are, you know, I've seen families, you know, maybe like the mom wants to buy her first home, and then she's like, she has 3 kids, all of them are professional, and then who are you? That's just letting me know you're working.
Sure.
Or my head is smoking, one of those two. So everybody wants to chip in, you know, into putting the funds together in order to close. And if you're a conventional and then you're making over X amount of money, if you want to, you know, just be a co-borrower, then home ready, home possible is not an option anymore. So 3% down payment is not there. Now you can do a 3.5 with FHA, which is better than 5%, obviously. But that extra step, you know, it's like, I need every single one's bank statements, you know, just to make sure the funds were there. And now it's a lot easier, you know, everybody chips in, they send the wire to the attorney, and that's pretty much it.
Yeah.
I'm gonna remove the
so then it's just more about verifying the why. Like, once the closing attorney has the money, it's like, okay, we got it. Check. Move on to the next thing on the list.
Yeah, exactly. And, you know, funny story is that I had somebody, they had money in their account, and they were like, okay, now we're gonna move this money from this account to the other account like a week before closing. And I'm like, no, the attorneys are actually going to make sure the money was wired from the bank account that you gave us, you know. And then people are moving, and it's all about education at the beginning, you know.
Right.
One person doesn't buy houses every single day. And then that's where we actually kick in. Just let them know, hey, don't buy cars, don't finance furniture, don't open new credit
Hmm.
cards, don't go to TJ Maxx. The
Yes.
10% off
No
is that,
Coles.
yeah, it's not worth it. Yeah,
Yeah.
exactly.
No. Say no.
Yeah. And we find that scenario. Now it's a lot easier, more flexible, and sometimes rates are a lot better for FHA.
Hmm.
I'm not opposed to
Hmm.
FHA. I love FHA. We have 100% financing with FHA now. So yeah,
That's awesome.
we closed on a house no long ago, and then this gentleman, he got money back. Yeah,
Don't you love when that happens?
Yeah.
yeah,
Like, congratulations, you bought a house. Here's some money.
yeah, exactly.
Hmm.
Go change the locks.
Yeah, exactly.
Yeah.
Okay, well, that's great. That's amazing. So, for people who could also utilize that, but then maybe they need some alternative financing options, what does that look like in the world of mortgage?
I mean, we have so many options, and that's just speaking from like CrossCountry's point of view. Like, I mean, even like from what we talked about last week, like we have jumbo construction lending. A lot of banks or lenders shy away from that because the risk is there, and
Hmm.
it's a bigger risk than just a normal construction size loan. We have bank statement loans, so if you own a business and you don't quite meet those expectations yet or the guidelines yet, or you haven't filed your tax returns yet in a year and a half or 2 years, you still have options as a business owner to purchase a house. um, that's what I know. Christian and I have gone back and forth with those, and we have ways to analyze the income. You literally like send it in, and within an hour most of the time they'll come back and say, hey, this is the income you have to use. And it's a whole spreadsheet of like analyzation. I mean, it's crazy. Like the things I've seen done with even CrossCountry with the options that we have, even like in-house or brokered products, it's like never ending. And I've had even situations where I've emailed our head of underwriting or whatnot to say like, hey, here's the situation. Do we have something that fits it? And
Hmm.
he'll either email back, yes, these are the two options, or like, no, but see if they'll go into this or whatnot. So, I mean, it's crazy. I've never seen such a profound portfolio of things you can literally like qualify people for.
That's incredible because I think
Yeah.
a lot of people just have a misconception of you have to have a W 2
Hmm.
job or you have to have this many years or whatever,
Right.
but there's different ways around it, especially
Right.
because I feel like that's popped up really post pandemic
Hmm.
world to be more popular because I feel like there's a lot of people who don't fall into that W-2 category
Yeah.
anymore.
That's
And
true.
I mean, all of us, we're
Yeah.
all like 1099 type employees.
Hmm.
So, when you're talking about people who work in our industries, like we don't get normal like
You don't fit the
W-2s.
mold. Yeah.
Right.
Yeah.
So even for people like us who need to buy houses, there's other
Hmm.
Yep.
options, which is really cool.
Yeah, there
Hmm.
are different ways to source
What
income.
else?
Yeah.
Yeah. So like what else could there be out there that you guys could
Mm.
offer?
Oh, there are so many options, just the difficult ones, or people think. I always tell the real estate agency, if you find yourself in a difficult situation and you're like, I never had a client like this before, that they were W-2 and then they switched to 1099 recently, and they were doing landscaping and now they own their own landscaping company. They've been
Hmm.
doing that for 5, 10 years, I don't know. And then we do have something like that. You have recently switched, you've been in the industry doing the same thing. uh,
Hmm.
we can use a 1099. I mean, if you haven't produced a 1099 just yet, we just a projection. We can use bank statement. We can do a P&L. The last 3 months, like how's your cash flow going? We can use assets. Maybe you own a bunch of homes and then you just have money sitting there, and then you don't really have
Hmm.
much income. You're on Social Security. Maybe that's going to be your retirement money. We just don't know. But we can use that as a source of income, at least security for the lender, and then we can give you a loan. You have $10 million in assets. We're definitely going to let you borrow 500,000.
Right. Right. Yeah.
There are situations like that. I
Yeah.
think one of the, I guess, use recently is going to be bank statements, just
Hmm.
because a lot of companies opened during COVID. Like A lot of people were on W-2 paying, getting paid hourly. Now they have their own businesses. They're doing Amazon. They're doing so many things. And then that's the other thing is like, okay, my business has been growing. I've been doing this for 6 years, but it has been growing. First year, I didn't make any money. Second year, I didn't make any money. Third year, I started making a little bit. Fourth year, maybe a little bit more. And then
Hmm.
now you last year, you haven't done taxes just yet. You have an extension. I mean, a regular lender will be like, just send me the last 2 years and it will do an average. Like, how is that going to help?
Hmm.
Like
Right.
you don't qualify for a loan because
Right.
we know
Right.
your accountant knows that your business has been growing, and then we can
Hmm.
see it. Now, how can we help you? Now we convert this into a different kind of program. And then we talk about non-conventional loans, and then we just use P&Ls or the bank statements, like I was saying. I mean, we don't have
Hmm.
those Amazon returns as income, by the way. One person,
Why not?
yeah, one person had like $1,000 on returns, and I was like, yeah, we cannot count that as income. It's
Oh
not,
no.
no.
Mm-mm.
It was
Darn.
funny, yeah. And we can use different bank accounts. I actually found this family. They have
Yeah.
like two different bank accounts for the same business, and we can
Hmm.
actually combine them. We can use two bank accounts. So I mean, that's normal. We try to understand people.
Hmm.
We
Hmm.
justify it, and then we talk to the CPA. CPA has to say, this is a business that's doing well. We just go based on documentation that we can see and support. But there are
So with something like that, like how long does that take? Like
same,
versus
Same time.
same time.
really?
Yeah, it's like getting a verification of employment. That's all.
Hmm.
Yeah, in this case, the CPA will do it. So as fast as the CPA can reply back, we're closing. I don't know, 21 days.
That's incredible.
Yeah,
I was completely unaware of that. So
yeah.
And
There are
it
see?
helps
there are CPA.
even like for the bank statement loans. The best situation I found is like the film industry because, I mean, they were on strike so much last year, and then now they're getting back to work. So I've had stunt people, that haven't had like regular income for the past 2 years, and they've used the bank statement because this past year they've actually made money again. So it's like every situation.
Right. So how does credit impact that? Is it kind of still the same requirements?
Hmm.
Definitely. I mean, the lower the credit, the more the risk. So you have to put more
Hmm.
down payment. I know there is not a lot of banks out there that can do 10% down, which is basically the minimum for bank statements in our company. And then we're getting a lot of attention just because of the 10%. A lot of people think
Hmm.
20% is like the minimum for non-conventional. And
Okay.
we're doing 10%. I mean, if you're tax ID, we're doing 3.5%. It's like an FHA loan for somebody that doesn't have a social security. And then we have that. I mean, we encounter ourselves in many situations that we are actually trying to find the solution for that. We have people
Right.
that invested in crypto a long time ago, and they have, I don't know, they have $500 in their bank account. They want to buy a house, and they have, I don't know, $100,000 in crypto that they're planning on
Hmm.
Mhm.
using as a down payment. So we have a program for that as well. Crypto is very, it changes so much that banks are not able to use that, but we do have a formula for that. So we're able
Hmm.
to use that as part of asset for purchase of home. You know, just trying to help everybody as much as we can.
Right.
You know,
I feel like at the end of the day, it's really just like don't assume that the answer is
Hmm.
no.
that's true.
Just
Yeah.
have the conversation. At least
Hmm.
reach out and say, "Hey, this is the situation that I'm in.
Hmm.
What are my options?" Because it's what I'm hearing is there are a plenty
Yes, there
that
Yes.
could
are.
possibly
Yeah,
help.
Yeah.
especially for those with no score. I
Hmm.
actually found myself in the last couple months with dealing with borrowers that maybe the parents do have a score and they need additional income, so they put their kids, the children, and they have a job, and they generate income, and then we can use that income as part of the transaction. But a lot of lenders say they don't have any scores, we cannot help them. And then some lenders will talk about non-traditional credit. Oh, okay, so do they pay electricity? Do they pay cell phones? Do they pay water, internet? Most likely they don't.
Right. Right.
Hmm.
And then you're like, okay, so we cannot help you. Just reading the guidelines, there are specific parts where it says if you make X amount of money and your borrower with no score makes this amount of money, we don't need anything. Just use the income.
Wow.
Yeah. So yeah, just make sure your kids find a job.
I
you
mean,
know?
I mean, I just feel like everything we always talk about just kind of goes back to the basics of like,
Get a job.
get a job, pay
Mhm.
your bills, have conversations, don't assume
Yeah.
things,
Yeah, never
and,
assume things.
Never
finding the
assume.
right people to help you is ultimately what's going to, because even if the answer's, well, we could right now, but if you saved this much more,
Hmm.
or if you were to have a gift that was this much, or, whatever the situation may be, then that could change things drastically and
Hmm.
make it more attainable for you now, or make a plan for a year, 5 years,
Hmm.
whatever you need it to be. Because I think that's what a lot of people right now, especially people who have never purchased a home and feel like they are never going to be able to,
Right.
they just don't understand that. Just have the conversation, open the door,
Hmm.
because if the answer's not right now, or we can't make it work for what you're comfortable with, because that's the other thing is like, you don't,
True.
and this is what I love about working with you guys, is you might be able to say, absolutely, we can approve you,
Hmm.
like you can buy a house, but your payment's going to be way up
Yeah.
here, like, and that's not a comfortable range for somebody.
Hmm.
Then at least you can have that information and open the door for the conversation, so then you can say, okay, well, if we waited 12 months and you did X, Y, and Z between
Hmm.
now and then we could get your payment into that range that you're more comfortable with.
Hmm.
And then all of a sudden, look, you could be a homeowner, you could be taking the steps towards doing something. I was talking to another agent today that she's, her children are adult age, but her daughter just got engaged, and she was like, I want to be able to help her and her fiance start their life, and so I'm gifting them the funds,
Mhm.
like, to help with the
Hmm.
purchase of their first house. And it's not something glamorous, like it's not like the super
Hmm.
nice new house, but it's going to eventually be an investment property for them. Like, they don't plan on selling it, they plan on getting in there, fixing it up, living in it for a few years, and then turning
Hmm.
it into a rental property, so it's another source of income for them. And she's like, I'm in the position to be able to help them do that now,
Mhm.
and so I want to be able to gift them that. She was like, that to me is the best gift I could give. And I'm
Awesome.
like, absolutely. Like,
Hmm.
Yeah,
Yep.
because that's like the gift that keeps on giving long term, that
Hmm.
you don't hear people talking about. And I don't think a lot of people understand how that impacts people's future
Mm-mm.
in such a huge way down the line.
that's true. I mean, definitely, that little spark. Megan, what? I
I'm
replaced the
gonna send
battery.
you batteries. Like
I
I'm gonna send
did.
him.
I am
I
too.
cannot disclose who's the
I'll
builder
just
and what kind of
drive
equipment they use,
you a package
but
of
I have
batteries.
replaced the
We
battery.
are a preferred lender for that builder.
Yeah, we can really say much.
Lord help.
Yeah. But anyways, I mean that little spark helps a
That's
lot of people. Just not the kids, but the grandkids later on.
Right.
Mhm.
And if they're
Right.
planning on turning their home into an investment home down the road where they can actually buy their dream home, because everybody
Right.
thinks, it's like their first house. It's like buying your
Right.
first car. You know,
Yeah.
it's not your dream
True.
car.
Yes.
Yes,
And let's not look to the TikTok celebrities who were like,
Oh
"Oh,
God.
I'm 22 and I'm going to go buy a house in the Hamptons and a Range Rover on the
God.
same day."
yeah,
That's not normal.
that's true.
Okay, they'll foreclose.
Yeah,
Right.
if you invested in Nvidia, it might be possible, but
Right.
that's
Right.
uh,
But
that's the new talk.
yeah.
Um, yeah, that's one thing that I wanted to talk to like the people that are watching us, the options about financing. There's definitely so much, and then we don't know all of them. So whenever you tell us what you're going through and what your situation is, we're gonna find the answer. We do have a whole team,
Mhm.
not just us. So we're like, okay, I have no idea how to handle this. I'll send an email, and then the
Mhm.
email goes to different people.
Mhm.
Different people goes, investigates. Maybe they heard about this before, and they find a solution for you. And then worst case scenario is like, sorry, we cannot do much, but we can guide you through the process where it can actually happen in the future. And then I mean, I have a lot of borrowers that are on that wait list. They're just working on the stuff that they need to work right now, and then a few months down the road they will be able to purchase. um, one of the things that I see now, in since I started in the mortgage business, is that a lot more Hispanic people are purchasing, and we have Hispanic people from all over the world. And most of these people will have a status, but not a resident or not a citizen. They will have a work permit, and this applies to anybody that moves into the U.S. and they don't have a residency, or they don't have a citizenship. They will have a work permit. So a lot of these people, they will start working as an hourly employee, and then down the road they may have a 1099, or they may have a company. Everybody's familiar. Every single lender out there is familiar with Freddie Mac. If your company's been open for 5 years, we'll use the last year of tax returns. That's the only thing that people have been talking about since I started. It's like your only option is Freddie Mac. Sometimes Freddie Mac's pricing is not the best. Fannie Mae may be more appealing to them at the time, but guess what? We cannot use Fannie Mae because their business didn't generate much money last year. And it's just that they heard that from somebody else, and now they think that's the reality.
Right.
You do read the guidelines, and then Fannie Mae does also use just 1 year of tax returns after your business has been open for 5 years. The reason why I'm talking about Fannie Mae is because Freddie Mac does not do loans for people with a work permit. And this is very important. And Fannie Mae does, and FHA does. And sometimes we have a grant for these people using Fannie Mae, and then we're obviously going to go that route. We're going to help them get into a home. And then all these people are happy. They've been getting so many no's, and then suddenly there is that little light.
There's hope.
Yeah, there's hope, and the people are happy. And these people are buying houses in your neighborhood. Your house is gonna be worth more. At the end of the day,
Right.
I mean, you're welcome.
Right. Win-win for everybody.
Yeah.
Yeah.
And
Yeah, absolutely. I think that stuff is so important to talk about because, like you said, they're even them as buyers, they're trying to have that conversation with multiple people, and they're just getting no's.
Mhm.
So it's all about who you know,
Mhm.
and who's in your circle and who can provide you the best service. So knowing that you guys are available to offer those types of things to people with whatever the situation is
Mhm.
makes it a possibility for everybody to be a homeowner, which, like you said, is going to help everybody else in the neighborhood, and their equity is going to grow,
Mhm.
and everything is just going to be better
Yeah.
because you had a conversation.
Yeah. And the county too. They're
Yeah.
gonna be like, oh, your taxes are gonna go a little bit higher this year.
Yeah. We don't have to talk about that.
Yeah,
I know.
exactly.
We just got our property tax bill, and I was like,
Yeah, us too. Mhm.
gross.
Exactly. Yeah.
But it just means good things.
It does. Yeah. I mean, if you know how to use it. Yeah.
Yeah.
Mm.
Well, I think that's a good segue to talk about the fact that next week, on our next episode, we're definitely talking about growth. And Christian talked about getting into your dream home. So that'll be something that we can chat about
Okay.
next week on our next episode. Come back and talk to us next week.
Please.
Bye.
Adios.
Like lightning, like